Hello there, and welcome to America Saves Week. I'm Dan Vredeveld, one of the advisors here at Richmond Brothers, and since 2007, there's been an initiative here in the United States to help Americans save more and get a really big gut check on their finances. And so today, what I wanted to do was cover Roth IRAs. And the reason for this is because Roth IRA is a tool to use to help with savings. Now, there's a lot of information about Roth IRAs. Some of it you may know, some of it you may not. For those of you that know about this already, maybe this is just a brush up. Or if you don't know anything about it, this is just some good information to consider at least. So first of all, a little history on Roth IRAs. They were started back in 1997. It was originally introduced in Congress by U.S. Senator William Roth, hence the name, and passed through Congress, and since then, Americans have been allowed to contribute to a Roth IRA, assuming you meet certain requirements. So one of the requirements to be able to contribute to a Roth IRA is income. You can't be over certain dollar amounts of income, and if you are, you get cut off and you can't contribute anymore to a Roth IRA. So for married filing jointly, if your modified adjusted gross income is anywhere between $196,000 up to $206,000, there's a reduced amount that you can contribute up to, and then if you're above $206,000, you can't contribute any. And then for single filers / head of household filers, the number is $124,000 to $139,000. So how much can you contribute? Well, it depends on how old you are. If you are under 50 years old, right now you can contribute up to $6,000. And if you're over 50, they let you do an extra $1,000 catch-up contribution, so you'd be able to do a total of $7,000. So the benefit to a Roth IRA is any earnings that you get and any distributions that you take are tax-free. And that is the opposite of a traditional IRA, whereas you're getting a deduction when you make those contributions, but when you take the distributions out, you have to pay the taxes on them. There are a few requirements in order to get the full tax benefits. First of all, you do have to be 59 and a half, like with any other IRA. And then there's also a 5-year rule. As long as you meet the 5 years where the account's been open for at least 5 years, you don't have to pay any taxes or any penalties, assuming you're above 59 and a half as well. And that's really nice too, is it's tax-free not just to you, but for your beneficiaries as well. And more recently, in 2006, the Congress allowed you to start contributing to a Roth 401k. So the Roth 401k has very similar tax rules as a Roth IRA. You're paying the taxes as the money goes in, but any earnings and any distributions that you take are tax-free, assuming you meet all the right requirements. But the difference is the income requirements, I should say the contribution requirements, are actually similar to traditional 401k. So you can actually contribute much more to a Roth 401k than you can for a Roth IRA. So let's look at a hypothetical example. Let's say you had $1 million in a traditional IRA and $1 million in a Roth IRA. Well, if you had $1 million in a Roth IRA, remember that's all tax-free money. So the $1 million is all of your money. Assuming you meet all the requirements, you don't have to pay any taxes, no penalties, all $1 million you get to keep. But in a traditional IRA, as long as you're 59 and a half, there's no penalties, but that money is still taxable. So after taxes over the course of your lifetime, you might only get to keep somewhere between $700,000 or $900,000, whereas like I said, in a Roth IRA, you get to keep all $1 million. So these are just things to keep in mind. The general idea is you really have more money for you the more money you have in a Roth IRA versus a traditional IRA. So are these the right decisions for you? Everyone is different. I can't say across the board it is the right decision, but if you do want to discuss further or if you have questions on that, please let us know. We are happy to help you. Give us a call, shoot us an email. Otherwise, thank you for tuning in. We'll see you next time, and happy America Saves Week.